All right, so we're back talking about the Fed again. We were just showing the odds. More than 90% see a 25 basis point cut coming up. I remember back before the other meeting, you said we didn't even need we didn't need any kind of cut, actually, not 25 or 50. We ended up getting that 50. Following the jobs report, what do you think about this next Fed move? Do you think that we actually need that 25 basis point cut? Again, 250,000 jobs added, wage growth year over year of 4%.
Yeah, and I would correct you, Frank. It wasn't that I said it; it was that the data said it, and there were others who pointed out that the data indicated that perhaps we did not need an interest rate cut, and I think that that's why we're seeing all of this accelerate. Now, make no mistake, this is a risk-on market, and when we see GDP revised upward to 1.6% in the first quarter and 3.1% in the second quarter, when we see earnings growth of 13% in the second quarter, when we see wage growth of 4%, I think the question becomes, and again, this is a minority view, the question becomes, do they need another subsequent cut? Because the other thing that jobs number did, Frank, is it alleviated fears of a recession, but it probably layered on some fears for some that the economy is still too hot.
All right. So some of those fears there, you think for some people the economy might be too hot. I know you're also looking ahead to CPI. You continue to be kind of worried about inflation and it possibly, reaccelerating in some way. I'm looking at the estimates. So when I look at the headline CPI, I see it going from 2.5% down to 2.3. Core stand the same. So what are you seeing there? What's alarming to you when we're talking about inflation?
So remember when I switched to neutral in July, Frank? It was because that month-over-month core, and it's the month-over-month number that really matters because it's the collection of those months that is going to indicate where we end. Because the core had dropped out of that 30 bips to 40 bips range, and we put up 0 for May. But then we put up 10 for June, in which case I thought we had a new paradigm. Then we put up 20 for August and 20 for July and 30 for August. And so the trend is actually going in the wrong direction, even as the headline number falls. If we're back in a band of 30 to 40 basis points of month-over-month core, the Fed has a problem. That doesn't get us to 2% inflation.
Okay. I also want to talk about the equity market. You're liking right now the Magnificent Seven stocks. I think it's kind of a change. I haven't really heard you say this before. Last time you were with us, though, one of your picks for us was Oracle. It's not a Mag 7 stock, but it's kind of one of these AI plays. Since you were here, it's up over 20%. But I do have to say, Greg, the catalyst for that big upside move was the earnings. So when we look at the rest of the Mag 7 stocks, they're up about 5%. What's the catalyst for the rest of the group? I mean, we do have an NVIDIA event coming up later this week. We've got the Robotaxi event coming up later this week for Tesla. But what sends the rest of the group higher? I mean, great call on Oracle, but what's the catalyst for the rest?
Right. And so that was, one name that you asked me to pick, but that has been my strategy for over a year. Even as I remained cautious and pessimistic on the macro environment, we've always told and always said on our network that you can find relative performance in companies that are going to put up 20% plus earnings growth. Of course, that was what would cause the move. And so if you can get companies that are at 20% plus earnings growth, and there's a number of areas, it's not just tech anymore. The GLP-1 companies will put up 20% plus earnings growth over the next
But Greg,
couple of years.
what moves the Mag 7, though? I mean, Oracle was just definitely earnings. We've seen earnings from these companies before, and, investors weren't amazed, even though the numbers were very good.
Right. And I'm not making a Mag 7 call. What the call I'm making, Frank, is that if you have companies that are tethered to generational secular tailwinds and are capacity constrained, as Oracle is in its cloud business, that's a great place to put money and know that you're going to get 20% plus earnings growth.
Okay.
Those are the stocks that are going to outperform.
All right, really quick, Greg, we got to go. 10-year back above 4% yield. Is that concerning for you if you're an equity investor?
I think it's what we should expect. Perhaps we're not going to get all the rate cutting in the near term that the market originally anticipated.